Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the CFDs on gold, and we're also going to be looking at our proxy for the silver market, which is the SLV ETF. I finally have a couple of counts to go through on silver. It's been a while since I've done an update on silver, as I've been going through all of my charts and updating them into a much more well organized, simple format, so I can do all of my work on one chart. So we're going to be doing our Elliott wave analysis first, and then we're going to be doing our basic technical analysis second. So let's get started here on gold. We're on the day time frame in linear scale. Now, in case you're new to the channel, we're making the assumption of a primary wave 3 completed on the 7th of August 2020 last year, and a completed wave 4 down here on the 5th of March 2021. Now, it is a pretty bold assumption, and I don't have extreme confidence in it, to be honest, as this could all still be continuing corrective activity. But the thing is, we had what looks like a 5-wave impulse off of that March low, and we've had what looks also like a 3-wave move back. So, 1, 2, 3, 4, 5 up and 3 back, with an extension in the 5th wave rather than the 3rd wave here. The 3rd at minor level was longer than the 1, so that's not a problem. It can be shorter than the 5, and that's still a legal impulse into a intermediate wave 1, and then a 3-wave move down into the intermediate wave 2. Now we're going to come in and have a look at this more detailed count in a little while, but the first thing I want to do is I just want to put a couple of levels on the chart. So just to show you how deep this wave 2 was, and this is what makes me a little bit unsure about the validity of this impulsive count, this bullish count, and that is the depth of this retracement. Now, if gold had been ever so kind as to just take this low below these lows, that would have made life a lot simpler from an analytical point of view, as we would have just shifted our Y over here with a lower low and the 4 over here and go whoop-de-doo, we're done. Here's an impulse coming off the low. Now that could still be the case in the double combination here. We'd have to recount how we're looking at it, but that could be a possibility. But since we got a retracement which did not create a new low, I mean, in other words, it was a retracement, not another impulsive move down, and there's no arguing, I think, that we can look at it as anything other than a 3-wave move. So we have to consider it corrective. And therefore, this is an impulse into a 1. This is a corrective move into a very deep 2, retracing over 90%, but not more than 100%. So it is a legal wave 2. So from there, we can project some of the targets. Now, we have our all-time high above us here at 2075.20, and if we break these lows, if we break down from here and we come through 1677, then the correction is still on. We would have to rejig how we're counting this. This bullish count would be invalidated. So the bullish invalidation point down here is 1677.21. Let's remove those levels now, and let's project forward the length of our wave 1 from our deep 2 as an extension to propose the potential length of our intermediate wave 3 targets. So that's what we're going to do now. We have 2 targets on the board. Both are taken in linear scale, as I don't think the price skew in gold up at these levels, from the wave 3 to the wave 4 consolidation and up from here, I don't think the price skew is sufficient enough to warrant looking at it in log. They would essentially be very close to one another if we did anyway. We're not looking at a crypto here after all. We're not moving in tens of thousands of dollars. We're moving in a few hundred at a time. So these are our 2 targets. This is the 1.618 extension of the wave 1. This gives us 2070. This should produce our wave 3 here if this bullish count is correct, and this is the secondary target at the 2618 at the 2310.17 level. I don't think we have to project the 3.618 here. I think we should really come up through these before we start getting any more bullish. So now that we've got our targets and we've got our initial 1 and our initial 2, let's have a look at this more recent price data and see if we can pick anything out which gives us, potential greater understanding of where we're going. So let's just zoom in and see what we can see. Now we're going to have to come down to, let's come down to the hour time frame here. So this is how I see the count off the chart. Off of the low on the chart. Now, as always is the case when we get these sudden reversals, these highly volatile, these spikes, it's almost impossible to pull out an impulse on here on any significant time frame. We'd have to come down to the 15 minute and 5 minute, but I have been down to those levels and you can dig an impulse out of here of 5 waves. So the initial move off the low does look impulsive, and then we have what appears to be another 3-wave correction. So this becomes our 1, 2, and then from that point I've assumed an extension in the 3, which is always the assumption I make first, and we go into minute 1, 2, minuet 1, 2, sub minuet 1, 2, 3, 4, 5, 3 minuet, 4 minuet, 1, 2, 3, 4, 5 sub minuet, 5 minuet, 3 minute, 4 minute. So this is 1, 2, 3, 4, no overlap. Now gets a little sticky here. This definitely looks corrective, and this final move looks impulsive, but this could be expansive, an expansive corrective move, this pivot to this pivot, but then we don't seem to get any follow through to the downside afterwards, so I'd rather assume that this was impulsive. So in that case we have to squeeze in one more count here, 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 here. So that's going to be down to minuet level. So it's not super clean, but it's good enough. And then therefore that brings us up to our wave of next degree, which is our minor 1 in this case. Now this could be minor 1, 2, 3, 4 into intermediate 1. But given the wave 3 targets we've taken at intermediate scale, sorry, excuse me, I'm going the wrong way. This could be minuet into minute, rather than minute into minor. But I've decided to say minute into minor. We can't have it into intermediate, obviously, as we've already done the intermediate 1 and intermediate 2. So, excuse me, slip of the tongue there. And now we seem to have come down in what is looking impulsive. Now the way I've got this labelled at the moment is, once again, it's one of those where I think I can see a 3-wave move. Let me just find my little brush, sorry. So I think I can see 3 waves here, and I think I can see 3 waves here with 5 in a C, and then I think I can see 5 waves forming here, so a little bit lower. So this could be an expanding flat. That's how I've got it labelled at the moment. So an A, 3 waves into a B, and then 1, 2, 3, 4, 5 waves coming down in a C. So if we just take a quick look at the expansion of the C here, we can see that we've come quite deep. We came down, bounced off the golden ratio here, back up, down. We've come to the 1618. So this is normally the target we'd be looking for our wave C. So it's possible that we've already put in the 2. It's possible. But if we look at the overall retracement of this move up, that would be our next clue to look at. So let's just well, we delete that. We can always throw that back on, no problem. Now it's not a very deep retracement. That's the one thing I will say. Doesn't even make it to the 23.6. So perhaps we should consider shifting the wave degree up and considering this the 5 up here, and this is not expansive, but this is actually a little impulse here with a 1, 2, 1, 2, 3, 4, 5 in here. We'd have to come down again to a smaller time frame to see if we can see it. So how would we do that? We've got to get the 1, 2, this could be a diagonal, but it's a little messy at the moment. So I'm not going to fiddle with it now because I might waste time from you guys when we should really be getting on with the video, but there's evidence to suggest it's impulsive off of a low. It's not the easiest thing to count yet. This could be an expanding flat into a 2, or this could be the top of the wave 1 here, and this could be the beginning of 5 waves in a zigzag down. Either way, I think if this is a completed 1, 2, 23.6 is very shallow. I mean, we've come to the 23.6, but it's very shallow. I would expect to see a deeper move down into the 50, maybe into the 61.8, into the golden ratio down here. So we'll wait and see how it develops. If it is a zigzag, I think then this is the initial 5-wave move that we're seeing here. So that would be, 5 waves down into an A, and then a 3-wave retrace into a B, and then a 5-wave move down into a C, and you'd end up with a zigzag like this, and that would bring us down deeper, and that would be a potentially very interesting buying opportunity here, so close to the lows. So that's something to keep an eye on. We'll try and come back with an update for gold within the next week or so. We'll leave it there now. We'll go over and have a look at silver. So let's just hide that out of the way, and we'll add that to our fibs. We'll lock it in place. Okay. Alright then. So silver. Now it's been a while since I've charted silver. My previous bullish interpretation got invalidated. One of the reasons it's taken me a while to come back with an alternative is because I had to recount everything and see what I could come up with. So we'll do the bullish scenario first, and then we'll do the bearish scenario. Now the bearish scenario, thankfully, is the same scenario we've been looking at for months and months and months. It hasn't changed. What did change was in the previous bullish count. If you haven't seen a previous silver video, go back and watch one. But we were working from an ending diagonal here with a completed correction like this, which was a running flat. We were saying A, B, C to here. And then we were working off of the principle, the idea that this was impulsive and then this was corrective into a 2. But then we broke this low here, meaning that this wasn't impulsive, this move here, and this was instead impulsive. So that means we went and made new lows. So the interpretation now, if we're going to interpret this bullishly, so we've still got our primary wave 1 here, and we've gone 3 waves into a W, 3 waves into an X, and then this is 3 wave zigzag into a Y, and now we're going up. The issue, the problem I always have with the silver chart, and it doesn't matter whether I'm looking at the silver CFD's chart or whether I'm looking here at SLV, I can get the volume profiling on here and some other features which I can't, depending on the timescale I'm looking at on the CFD chart. For some reason, volume isn't always available, but either way, I digress. It's difficult to make any sense because there's so many gaps in the chart that finding the clear wave structures is very difficult. So one of the little tricks I tend to do is I just think switch into Heikinashi here. I think that's how you say it. I have no idea. And then this seems to tidy up the chart a bit, but you have to remember you are essentially making you are being a little bit assumptive doing this. So I can pick out 5 waves down here. Okay, so this could be an A diagonal leading diagonal into an A corrective double combination or triple combination into a B, and then a 5-wave move down in a C, giving us a zigzag with a diagonal and an impulse to finish as part of our Y wave, and now we should be bouncing higher if this is correct. So that's really it, there's not much else to it. It's pretty simple. Like I said, there's not much small digging out of account we can do here on the silver chart. It's just a little too messy. But we appear to have, at the moment, this could be impulsive. Let's come down to the hour chart for a minute and see if we can make out anything. Okay, let's just throw back on the... Okay, so here's our low. Now this looks like 5 waves into 3. So you got 1, 2, 3, 4, 5, A, B, C. And then this looks like 1, 2 as well. But this looks expansive rather than a zigzag. So it could be that into 1, 2. And then this could be 1, 2 as well, which I think at the moment is the only way of looking at it from an impulsive point of view, from a bullish point of view. So this is either the beginning of an extension, or this is just more corrective activity before we break lower again. So let's just whack a channel around this, since it is corrective. Well, it might be corrective, it might be impulsive. Either way, we're trading up in a channel at the moment. and we're either going to continue to do so, and then this count, if it's impulsive, will expand and grow as we start continue to build out this extension higher, or we will simply break out of this channel, take out the lows and continue lower. So on that note, let's look at the bearish count. Now you're probably very familiar with this as we've had it for a long time, and it is extremely bearish. So let's just get rid of the bullish count for a moment. Do we need these trend lines? Yes, that's a leading diagonal down. Hide that parallel channel. Let's bring up the bear count. So super simple here, breaking it down. We still came up into a 1 back here in August 2020 at the same time the gold market topped in our proposed wave 3, but we're not done yet. The idea is that this is an expanding flat. We had a 3 wave move down into an A, a 3 wave move up into an expansive B going beyond where the A began, and now we're going to see a big 5 wave move down. Okay, and this will be an A into a B into a 5 wave move down into a C, and we're using what was a leading diagonal of an A for our bullish count as a leading diagonal of a 1, ABC into a 2. Counting this as a zigzag. You could see it as a combo or double combo, triple combo again, but you could also squeeze 1, 2, 3, 4, 5 waves ABC, 1, 2, 3, 4, 5 waves into here. Gets a little messy. You'd have to look at this probably as a diagonal into the C here, and then we come down and then we start impulsing down. So I've got this as a 1, 2 so far, 3, 4 with a 5 to come. So if I'm correct on the bearish count, this little channel we're observing will break to the downside, and we'll have another flush down to find the 5 of the 3. We will then be looking for the retracement into the 4, not overlapping the 1 back here, and then thrust our way down into the 5. Don't know where it's going to finish, but the reason I've selected where I've selected, a couple of reasons. If we just bring up our which one's this one? Fib retracement here. We can see that off of the low back in March 20 to the high, we can see this little node of volume around here, right around the golden ratio, right around the 61.8 and the 65, right around this peak of volume. Very little to stop the price from collapsing through here. You know, this is a big gulf of lack of market acceptance, and we can see why, because we just had this vertical move here, very little market acceptance here. So you can see how we've held around the 38.2 all the time. So this is why the bullish count still has validity. I think we've held support for a long time, we've moved sideways, we've done enough to consider it a correction. If we're impulsive, we will start to get a move back up to the highs, and we will break those highs and make new ones. If we break this 38.2, then I would in a way that takes out all these previous lows, that would suggest that we are going to continue to impulse lower to find support, and I don't think there would really be any stopping the bears once they enter this territory. There's no reason, because the buyers will not be coming into here, they'll be looking for somewhere to buy, and I mean, it's possible, I guess, but once you tend to come through these voids in the volume profile like lightning, but then you can find support lightning fast as well. So I would suspect we'd fall through here, come deeper, try and find the 61.8 for the wave 5 here, and then we'd bounce, and that would be a deep 2. Now another way of projecting this is taking the length of A and projecting it from B to find C for an extension of what would be an expanding flat, since the B went beyond the start of the A and has already proceeded to a depth which could be a running flat, but we've gone so deep it would more likely be a expanding flat. So let's just look at that. So all we do here is we take our fib extension, come up to our top, and then come down to our A. I'm going to have to replace that in a minute. Okay, let's just zoom in and put that on accurately. And up the top here, make sure this is on the very spot. Okay, Okay, let's lock that in place and zoom out. Alright, so the 1-to-1 is here. Okay, right around that 38.2 Fibonacci support level. So we have got support here, and that would be the argument for a running flat. Okay, but it's already complete rather than an expanding flat. So you could say, let's turn the magnet off. A, B, C, sideways correction, off we go. And that means that this C would have to be interpreted as 5 waves complete rather than an extension in a 3, which is how I've got it. But what I find compelling about this, let's just hide, sorry, let's keep that on the chart, is right around our 61.8% retracement level for our golden ratio. Here's our 61.8 here, and here's the 65, and here's this little node of volume. Right in between the two is this purple line here, and that's the wave C extension target 1.618 for its maximal extension for an expanding flat. Falls right in the same territory, so that just feels like the price wants to return to here. It's not a guarantee by any stretch of the imagination. Like I said, the support is still very strong, and I would not really be getting in behind this idea until we see these lows break, which have been providing support for many months. So that's how I see silver for the moment. Let's hide that. Now let's do some basic technical analysis here and see what we can see. Get rid of the bear count, get rid of these trend lines, and let's bring up our moving average ribbon back out to the weekly time frame, and we'll work our way in from here. Zoom in on the more recent price data. Okay, so significant breakdown on the weekly time frame from the point of view of our moving averages. Now I haven't got them all switched on at the moment. Let me just pop on the other two. Okay, so what we're looking at here are 4 exponential moving averages. In case you're new to the channel, we have a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We also have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. And down here we have a MACD with a 10 for the moving average and a 20 for the signal. Okay, so we're down in oversold conditions. Right, down in oversold conditions in the RSI. We're below the 60 exponential moving average. Here we are currently bodying 1, 2, 3, 4 candles for 4 weeks below the 60 after moving down. We've spiked up with the wick here, tested the 10, come back down. So if we're going to be rejected, and that is a corrective channel we were talking about, we will not break the 60, I don't think, here, or the 10, and we will roll over from here. If we do break through the 60 and get to back above the, have a strong bullish candle closing the week above these levels, that could be a bullish sign that we've bounced again from the same sustained support we've seen for many months. We have done a round trip overall now, that I like to call it, which is where we've gone from extremely overbought conditions here at the start of the correction all the way to oversold conditions here at what is potentially the end of correction. So although we may have lower to go, it's always nice to see this first before we consider the completion of a long or drawn out correction like this. We like to go from overbought to oversold. The market has cooled off sufficiently and buyers can now consider re-entering the market under safer conditions. So the MACD has trended down the whole time, the RSI has trended down the whole time while we've moved sideways, losing that momentum. Like I said, you can see with the volume profile, we do have that big gulf here with our point of control all the way down here, with the 250 somewhere in the middle of it. So although we don't have the fib support in this gulf of volume here to catch us, the 250 exponential moving average is here, so you could get a bounce from a Fibonacci perspective in the middle of nowhere. It could happen because we could be hitting a major moving average. But without the confluence of other support levels, you can't necessarily expect it to hold. So from the weekly time frame here, we're either going to get back above these support levels or we're going to start crossing over these averages and it would just continue to look more bearish. But if it does thrust lower in price from here, if we do break down, then the one thing you've got to be looking for is a bullish divergence on the RSI. So we've already got a low. We've already come back into neutral. If we come down here and set a higher low while price breaks down, that would be a bullish divergence and a sign that we are bottoming out and building up supportive momentum underneath the price. So that's something to watch for in the coming weeks. Let's come down to the day time frame, see what we can see here. Looking a little more dire, but then again, we haven't seen the death cross of the 60 over 250. You know, I'm always talking about that in previous videos, that I don't put too much weight in it, because very often when these major moving averages get close to crossing, or do cross into what people call a death cross, that often means that you're actually quite close to forming a low, or a significant low. Now, one little thing here we can see is there is some bullish divergence in the shorter time frame between these lows and these lows, but that could simply accommodate this corrective move back up to test the 250 and the 60 on the daily here, and also this price support has now become resistance. So we've come down through this level, back up to this level to test it. So a thrust back above this level would be bullish, because then we could test this level and these moving averages and move higher. A rejection here would be bearish, and we would expect to see new lows, taking out these lows here. So that's what we're seeing on the daily time frame, below the 60, below the 250, back above the 10 and the 20, with the 10 crossing over the 20. But until we see a move back above these averages, we have to treat this level as resistance. So just keep an eye on that going forward. RSI moving back into neutral territory, not at overbought yet, but we have had a significant run in the RSI from oversold conditions for very small move in price. I say relative to these huge swings we've been through over the last few months. It's still a significant move on its own. MACD, we've got bullish momentum here, crossover of the average through the signal, but it does appear to be waning somewhat. It hasn't rolled over yet, and the moving averages haven't rolled over yet. So we could still see a bullish move higher, but no real confirmation either way at the moment, because we don't have any bullish divergence at these lows. Okay, we just have low, lower low, and then low, lower low. So maybe if we swing down on the MACD into something like this, and we get low, higher low with that further move down, and we see the same in the RSI, we can start expecting a reversal back to the upside. Alright then guys, that is silver. So a quick basic analysis now of gold, and then we will wrap up the video. So let's remove the primary count. Let's just clear everything off the chart. Now, oh yeah, I just added in that wave, didn't I? So let's throw that into the primary count. And I know you've got to hide it. Okay, bring up our momentum indicators here. We're going to come out to the weekly time frame again. And we're also going to bring up our moving averages here as well. And we're just going to zoom in on the more recent price data. So on the weekly, above the 60 exponential moving averages, average acting as support around here, currently trading in amongst the 10 and the 20, no crossover of the 10 and the 20 over the 60, got close to doing so, you know, back here, actually did so, the 10 over it, but we'd already bottomed by that point. This is, yes, it was a temporary bottom, but it's an example of what I was talking about earlier. These averages get very close to one another, everybody starts to get bearish, but that is often a bottom. Not always, but often is. And look at the bullishness of this candle, this hammer here, that's phenomenal. Another huge hammer here, absolutely gigantic hammer. I don't think I've seen one that big for a while. So this is extremely bullish rejection of this lower pricing down here. So in the simplest term, these lows just make up a seriously strong support level here that's been tested 1, 2, 3 times. So if we revisit these levels again, I would be getting more bearish. We've already had an extremely deep retracement. Another one would get me a bit suspicious if these, and then these levels, you'd have to see them break before we could completely cancel out the idea of a bullish scenario, because our bullish invalidation is down here at these lows, but we're tangled around these moving averages at the minute. So we need to get moving. We need to get this impulse complete, this potential 1-2, and then start pushing up. Okay, so on the RSI, what have we got here? Hanging around the neutral zone. We did go from overbought to oversold on the weekly time frame, but only just. No deep move into oversold. The MACD here, that huge swing. Now you do get really bullish move here on the MACD if you consider the divergence, although there's not true divergence because we've got a low and a higher low, right? But the low and the higher low here is far greater than the low and the higher low here. So there was a lot of bullish momentum building up under these lows here. We can see confirmed by the bullish hammer we've had here and here that there was an awful lot of bids come into the market down here. So it's holding, and we can see that it's also been price support and resistance here. These candlesticks coming in, these candlesticks coming back. So this whole level is a huge supportive level from a basic and technical analysis point of view. So we'll leave this dashed line on the chart. And yeah, I think that's all we've really got to look at. How are we looking on the daily time frame? We're even more bundled together here. We've got the 250 switched on. Yes, we have. Oh yeah, I've got the wrong colour on it. That's why I'm struggling to see it. That's better. There's the 250. Okay, yeah, we're just coiling around the moving averages here. Lost all impetus really. The swings have calmed down. So now we really want to see a convincing push higher. If this is going to be an impulse and then a breakdown here, we need to see a convincing push higher. If we don't, then all of this that we built up here will just become resistance to any further price move if we fall back below all of this. And then I think at that point you've got an argument to suggest that you're going to go down, come up to test it down, and you're going to keep working your way down again into a longer term correction. Right then, so that's how I see the basic technical analysis as well. One more thing I just want to check before I go. I just want to throw up the longer term pitchfork and see where we are sitting inside of that. So this is taken off of the primary wave 2-1 pivot all the way back, going back all the way to 2016 low onwards. So you can see here that we're still trading around this median line. We are testing it currently again. Let's move up to the median line from the 50 here. We've hung around it here before. We've hung around it here before. You know, so it is proving to be resistance. We had that touch on the 38 too. Let's see if this fits any nicer in log scale. It's got 50. We're hanging around the 50 from the median line here in log scale. I'm not sure which I prefer the look of. Let me just have a look. 6180 support here, 6180 support here, 6180 support here. So from a supportive perspective, you got these lows around the 61, this one, and then these recent ones, and the push down to the 89 here. But then I'd argue that the median line is less significant in this case, so I'm not quite sure which I prefer, whether we're doing all this trading around the median line and we don't have really strong supported levels, or whether I prefer the look of these supported levels in the pitchfork when we look at it in log scale. Either way, we're still in the thing. Market geometry is still intact. The bull market in that case is still intact. I still believe we're in a primary wave 4. I don't think this can be counted impulsively from a top. What I mean by that is, if this wasn't a 3, if this was a 1, then we'd be expecting to see a 5-wave move down, and all of this looks like a bunch of sideways noise to me over the long term, admittedly, but it doesn't look impulsive. So anyway, we'll call it there, guys. If you're new to the channel and you've liked what you've seen, thank you for joining me. Please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below if you want to, and thank you as always to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron, have a look at the tiers following the link in the description below, and if you're not following me on Twitter yet, there's also a link to my Twitter feed below as well. So alright guys, take care of yourselves and I'll be back with you soon. All the best. Bye bye.